We'll get started here in just a minute, folks. Well, welcome everyone. Markets are melting down. I thought I'd come up again. There's a couple of things that are occurring here, and the room's filling up pretty quick. So we'll go ahead and kind of get into some things that I want to talk about. Before we get into the questions you folks are asking here, let's talk a little bit about what's the bigger scheme of things of what's going on here. And I was thinking about things overnight. I know everybody's giving me great congratulations on the 5,100, but it was right there. You guys, anybody that has the indicators, had those numbers, right? Those are just the Fibonacci targets out of our WaveTech indicators. But the point of the thing I want to talk about here, I think, is very interesting. Let's put the rear view mirror. Let's look in the rear view mirror for a few minutes here. And what have we been watching? We had an obvious president who wasn't president. Biden wasn't even, I forget the guy's name that was kind of the shadow government that has been running things. We opened up the borders. I know I'm going to sound like a right-wing crazy guy, but I live in Arizona, and we had an illegal guy standing in the backyard threatening my life, or my wife's life one night. So I've been affected by this stuff. But one of the things that we have to look at, remember last year when the election year, and all of a sudden all the unemployment numbers were looking so good month after month, and Bidenomics and all that crud that we were putting up with? Well, what was happening is they were cooking the books, and they've been cooking the books for years. So basically, I have an old joke, is it Memorex or is it real, right? Well, it was Memorex. There was nothing real that we've been seeing, not the employment, not the, nothing in the economy was real. It was all being pumped up. You got, trillions of dollars being dumped into the markets. You got, the Fed's been in on the game as well. So they cooked the books to make the U.S. look good. And then you get a guy like Trump comes in. He goes, okay, enough is enough. And I know everybody's blaming Trump for this crash. And I'll tell you what I'm seeing happening here is that Trump, if you haven't read The Art of the Deal, then you don't understand what's going on. Basically, he put the deal out there, hey, don't retaliate. I saw Scott Bressett, do not retaliate. And if you do, it's just going to get worse. So, yeah, Trump started the game, but all these folks had to do was show up and say, okay, we're not going to retaliate. Let's negotiate for the next couple of weeks. And that's not what happened. Everybody wants to retaliate and go against Trump. And what are we getting? We're getting a complete meltdown in the markets, right? And so easy, right? You could do like Vietnam. I think it's Vietnam, or they've already folding the cards. There's a lot of folks. Basically, let's do a deal was what was put out there, and everybody said, no, I'm not doing a deal. You're not doing this. We're going to keep charging the U.S. tariffs, but you guys can't charge us tariffs. And we're seeing the effects of this. Let me put a chart up here so we can. I've got one of my favorite charts here is a 5-second chart. So let me just go over here, and the reason why I bring this stuff up is it's pretty obvious. I mean, you see China's retaliating. It's like everybody loses. All you have to do is do a deal, present a deal. Don't retaliate and raise and start the war. If that's what you want, then everybody loses. And it's unfortunate, but anything to do with Trump, the TDS folks and all of these people that are charging the U.S. tariffs, don't want to be charged tariffs. They don't want it reciprocal. They don't want anything to come back their way. And one of the things that I put out in one of my newsletters a couple nights ago, I was talking about the historical events that have happened on the planet with shifts going back all the way back to the Roman Empire. And we've seen these kind of shifts where all of a sudden somebody rocks the boat. It could be Rome, it could be whoever. And sometimes for centuries, things would be locked in like they were. And I'm just looking at some comments. Yeah. I'm just reading a couple comments here. Bear with me, folks. Yeah, not only did just thanks for the super chat there. Not only did did Biden keep all the tariffs, he kept the Trump tax cuts. Those 2017 cuts, they didn't touch them. But meanwhile, I guess my point is, when you cook the books, what we had in the markets, and how many folks over the years, including myself, that things got so frothy, like how high is high. The reality is that what we're seeing right now is that fluff that was in the markets, all of that information and stuff that we were acting upon that was not true, was not reality, is now being taken out of the markets. So 10%, there's probably 30% that could come out of this thing. I saw somebody buying the tips 30% down. No, don't do that yet. No reason to do that. There's going to be time, and I'm going to bring up a couple things. And I'm bringing up, I was thinking, man, we got to bring back the 2020 playbook. And many of you met me back in the pandemic because I didn't do any retail stuff, and all of a sudden I got a lot of attraction by tons of folks, literally, tens of thousands of people watching me every day. And the reason for it is I had some answers. I have a process. And one of my biggest things that I always talk about is process over attitude and opinion. There's people on here I know that have probably heard me say this for years. If you don't have, you have to have a process. You can't just, count on things to continue. I've been fighting the buy and hold community in the institutional community for years. And I'm thinking, how could that be a strategy, right? I'm just going to buy and hold because you can't time the market. And, that's one of the stupidest things that probably ever been put out there. Meanwhile, I started on the Chicago Board of Trade in 1979, and I didn't see anybody buying and holding anything. I was buying and selling and buying and selling, selling and buying, but I didn't see any buying and holding. I actually thought that was a joke when I came off the floor and came up into the Wall Street world. And but everything we're seeing right now, folks, is the air being coming out of what we've been lied about. I'm going to go on one more little rant here. This I'm going to bring the chart off so we don't have a distraction. The other thing that I think is important to understand is that the whole Doge situation, while I agree with it, I have been saying in private conversations that my biggest concern is going to break something. And I think they wanted to break this market. I think they wanted to break a lot of things. But one of the things that you don't want to break, and I had CNBC on for a few minutes this morning, and some guy came in, and what did he say? He goes, people are losing confidence in the system. I don't think that's happened yet. If they did, they wouldn't be bidding the bonds up, because the bonds will be the ultimate viewpoint of where the breakdown will occur. And because that, if you're not willing to lend U.S. money anymore, going down with yields dropping that's not the sign of a lack of confidence. Okay. But what we are seeing in the equity markets is all of the air is coming out of the balloon. So we're going to come back to reality. We're going to reset. There's no reason to hurry back in this market. In fact, our database is just rolling over on an intermediate level. We've been rolling over for the last, let's say, 6 months. We've been thinning out the markets. If you get my Substack newsletter, then you're going to know that, I was talking about the intermediate models starting. There was a time where we had 9 of the 12 sectors long, and we just been watching one sector after sector start to get sold out, and then we started narrowing the database. And I talked about something last night. Yeah, I don't know. Do we got any Smurfs around? If you see anybody that's being kind of nasty, just take them out if you would. So don't give them a lot of rope, because there's just a lot of trolls out there right now. But let's try. I'm trying to get a nice coherent thought here and get on a little bit of a rant before we get into the markets. What time we got? About we'll get back onto the markets here in a minute. Yeah, we listen. This is the rules for the channel, and it has been. I've done a lot of live streaming on YouTube, and you can disagree with me. That's cool. Just don't call me names. Don't do those kind of things. Okay, that gets you out of here pretty quick. So we're just trying to have a discourse here. But I'm telling you, what we're seeing right now is all of the fraud and everything coming out of the market. So what Doge has done has exposed, my opinion, that the U.S. government and virtually every one of its agencies is fraudulent to a large degree. And one of my biggest concerns, and I've talked about this on some Substacks and some previous, is about 50% of tax revenues on business and personal are people that are self-employed, that own small businesses and that. And my biggest fear is that they're discrediting so much of the government, and it's real what we're seeing. But the worry is that if people really lose confidence, they don't pay their taxes, they just disrupt everything. And the people do have all the power. We've given the politicians, we've given all these people the power, all of these tariffs and retaliation. Just don't buy, it's kind of hard for Chinese stuff. The cheap stuff doesn't matter, but don't buy the products. We get the power of the purse. We are here in the U.S. the largest consumer on the planet. So we get to spend our money. We've already seen the effects of some of those things. But my biggest concern is the real lack of confidence. And I'm just putting up on the other screen here. And I'll bring this up while I talk about this. Just got to change a couple things off. We're looking last trade right now, right at 4% on the 10-year. Let me bring this up. So the yields dropping means somebody's buying bonds. So confidence is still there in the system because you're willing to give the United States government your money. This is the safe haven trade. If the safe haven trade goes away, then it gets uglier, really ugly. And I don't know where this thing's going. I'm not claiming I have any answers other than some of the things that I showed you in last night's live stream. Is our database has just been kicking things out. Most of our most of our portfolios are in anywhere from 40 to 60% in cash. So we've changed the beta of the exposure to the market substantially, and maybe we're heading for 100% yet. I'm just looking at a couple comments here. Yeah, the Fed's not buying. Paul hates Trump. They're not going to help out. Yeah, let's talk about it. Look at the employment numbers. Of course, that's the rearview mirror. The next employment numbers maybe will have more impact. We need to watch the claims numbers a little closer as we go forward. Everything is labor markets. Everything looks fine, and even Paul was saying that in some comments. Like, hey, everything looks good to us, because everything they do is pretty much looking in the rearview mirror, at least what their rhetoric is coming out with. So let's just kind of continue on some of these thoughts that I'm talking about. Is if there was a true, this chart here, if you see interest rates starting to skyrocket, not go down, that will be the lack of confidence in the system. Right now, everybody has full confidence in the system. You wouldn't be buying these bonds here. Somebody's buying the top of these bonds. Let me put up here something. Let's put the futures so you can see this spike rally here. So this is the 10-year futures, the notes, and you can see it's that they're spiking up here. So, and it's already kind of spiked and coming off of there. You don't want to be the bag man and holding the top of this. But this chart, if it were collapsing instead of going up, would tell you the lack of confidence. Yeah, we can. We'll bring up a couple things. Looking at trying to interact here. I'm going to hang around for. Been around 19 minutes. We're going to hang around for a couple hours. We'll get into some charts here in just a minute. Yeah, I'm going to put this up. Thanks for the comments, folks. I'm just reading some of those. I was just talking about last night that I thought gold was pretty much topped out, and in last night's stream, pretty big move here, down 280. This is a daily. Let's move this out to a monthly. So let's ask a question here. Which way would the markets go if there was a loss of confidence on gold? I would suspect, in theory, it would go up, right? So let's go to a monthly chart. This thing's been parabolic. And this is what I was showing last night. All the algos are suggesting we're at a top. We're going to start at least a sideways move down. Hey, Andy, thanks for the super chat. Just looking at your comment here. Yeah, I would agree with Andy here. Germany and France contraction, Italy, UK flat, China is with deflation, overcapacity. Yeah, I mean, they got nothing. I'm serious. I know people want to equate this 10% move in the market. You have to remember, I was around in 87. I started markets in 79. In 1987, in 3 days, we lost 40%. Okay, so this is pretty good, but we were clipping 10-15% per day. Of course, on Black Monday was the big hit, and it was one of my biggest trades because we were short coming into Tuesday and Wednesday of the week prior to Black Monday, and it was one. I bought a pretty black turbo Porsche right after the 87 crash. I used to call it my Crashmobile, and my trading assistants used to call it the Batmobile. It was all black with black interior. I had the old cell phone that was attached to the car. Remember, this is 1987. So anyway, the result of what we're seeing here on gold is peaking out. How low does it go? I think last night I talked about it going to maybe 3,100, some pretty good. It's not going to collapse, I don't think. But if gold were to collapse somehow, that's a win for Trump, I would think. That's a win for the U.S. And this is going to get really, really ugly. Maybe not in market numbers at the moment. It feels pretty ugly. It could get way, way worse. So, but I just want to go back to one last thing, and then we'll go total on the markets here. And I want to take some of your questions as well. Yeah, I mean, faulty math on tariffs. It's negotiation. That's what people don't get. Trump's already got $4+ trillion in his pocket of capital investments. Imagine we all started a business right now, and we got, I don't know, let's just make it a number that's real. We got $10 million in our pocket, and somebody's telling us our business model isn't going to work and nothing's going to work. But I got $10 million to make it work. So I get his shot here. Trump has got something I've been talking about this, way more than anything that the Federal Reserve has. Federal Reserve they can create cash out of thin air, right? That's one thing. But can they create real jobs? No. Do they have investments that are being promised to come into the U.S. to build here? And of course, the argument is you can't build these factories overnight. Didn't Tesla build the largest auto plant in 3 years ever? Wasn't that 3 years? What? Did I got it wrong? I don't know. You got a lot of, do we have the materials? I don't know. We got a lot of empty factories. Maybe we can redo some of those. I will talk about Bitcoin's resilience. It's become, I meant to mention this in last night's Substack, it's become a bit of an alternative asset at the moment. So it does that from time to time. It's a risk asset most of the time, but every so often it shows something different. We'll talk about that in a minute. But the bottom line is Trump's got, let's say, 4 trillion. I've heard numbers thrown around at 6. I don't know if it was Trump or somebody in administration. That's $6 trillion of capital investments, not of cash. Capital investments that will perpetuate a decade of growth in itself. Jobs, stability, capital investments, so much better than just cash. The Fed can juice cash in there, bring rates down, and all of us folks out here and the market participants will get all excited and buy, they're easing. That stuff is just a joke when it comes to real capital investments. Think about this. The Fed threw in almost 8 trillion, 4 trillion initially in the pandemic in cash. What if they would have had 4 trillion in capital investments? What would it look like today, 5 years down the road? They wouldn't be doing QT trying to take the money back, right? So the whole inflationary thing is always monetary. So what's happening with the tariffs right now is just pulling money back, and these capital investments are going to be an absolute huge boon for the United States. I guess folks could renege and say, we didn't really mean it. All that stuff, any of that's possible. Chances are that they're going to want to participate and go from there. If I'm just trying to look at some comments here. Yeah, Crazy Eddie, I can't argue what you're saying there. Promises of investments, right? Exactly. Um, so when you ever, if you publicly promise something and then you renege, what does that do for you? Man, lots of super chats. Appreciate it. Really do. Um, yeah, it's interesting, Andy. Appreciate the super chat. Um, yeah, I guess what I'm trying to say is if you have capital investments promised, you know, is it a good practice on a world stage, especially in the moment in time we live in, where everything is visible between social media, all of these, all the platforms and the visibility? Do you want to go down as the guy who said that, basically called wolf, said, "Oh, we're going to invest. Oh, but we were just kidding." I don't think it's just kidding. I think everybody the most if this happens, I'm going to make this comment, and is if this plays out, that all these investments come in and we have all these foreign governments investing in the United States, that's going to be probably the best long-term peace contract you could come up with. Because do you want your stuff confiscated? Let's say you have successful things going on here in the U.S. and plants and commerce. No, this is uniting the world in a different way through the U.S. Right? And I don't know what this looks like, folks. I don't know any more than anyone else. I'm just looking at things, and I'm one of the things that I listen to the most is I'm listening to the noise right now, and you got Jim Cramer on the wrong side of this, on the other side of the trade. So that Trump's going to probably be right, that a lot of these things are going to work out. And if we wash out all of the fraud and abuse out of the markets, then we're going to have better ratios on all the financial metrics, all of that stuff. Yeah, that ain't going to happen. 25 trillion, not going to be necessary. Not going to happen. Fed's out of that game, guarantee you. They made that clear, and in fact, the Fed may not even be in existence after this. Okay, Trump's going to probably try to get rid of the Fed. That's next on the thing. So don't count on the Fed. The Fed's not going to do 25 trillion. Really, what we're seeing here, folks, is that I'm going to go on my old website. I want to see if I can find this one report here real quick. I think it was 2017, my annual outlook of 2017. Hang on. I'm on my old website. I just want to see if I can get to. Bear with me a sec. I haven't been on this website. It's pretty much defunct. All right, we'll take another break. I'll it's probably under. Yeah, I'm just not finding it. But anyway, I wrote it, so it's been a few years back. But one of the things that I was talking about back then is that what would be the number on yeah, I think we were at $18 trillion at the time. So we basically have doubled the national debt there. I said, what number is it where we finally hit the wall and enough is enough? And I think we've hit that. To think that the Fed's going to put $25 trillion into markets, you know what? At this phase, it'll be a lot easier just to let them implode and rebuild. And I think that's this is like not a remodel job. Instead of remodeling the house, we're just going to bulldoze it. Okay? And that it will get rebuilt differently. Rebuilding on more debts, it's over, folks. That's what we're seeing. This game is over. And this is the beginnings of a lot of fears that we had. So this isn't going to go away, in my opinion, very quickly. There's going to be some great tradable bounces coming ahead. There's some other things that are, yeah, I'm just looking. Andy's paying to be heard, so I'll go ahead and let's see here. Yeah, I think American productivity is going to expand. We're still living in the age of AI, automation, robotics. A lot of things are going to replace what we've known. And this is just one of those points in history. That's why I brought up the other night when I was looking at, I'm just kind of bringing up this, the newsletter from a couple of nights ago. I believe it was this one. Yeah, when I went through going back to the Roman Empire, the Mongol Empire, and then all the way into coming into the 20th century, this whole debt building thing I believe it's over. So we're going to have to just implode everything. I don't know how ugly this gets, but I think we're looking at that point in time where things have changed. Not going to go back to bloating balance sheets and those kind of things. That's not going to work. We already know it's already broken. You're seeing it in front of you right now. So that is the case from the standpoint of where we are right now and what's likely to go. Don't expect the Fed to bail anything out. I could be wrong. They might do something, but what's happening here isn't going to change. Man, I'm making some money today. Yeah, I would agree with this last super chat that this is what we're seeing here, folks. This is the end of the old game. The old game is over. We're seeing in the perspective of an old dude that's been around for a while, watching politics. I think first presidential election I voted in was with Jimmy Carter. I actually voted for Jimmy Carter, then became a what they call a Reagan Republican. I voted for Reagan when he came in because things got really ugly. And I think we're seeing that kind of conversion. But I think everything is up for question right now, folks. This is not something, this is not a blip on your screen. This is the beginning of something new, and I agree that we're going to have to start to produce and get rid of all of the fluff, Yeah, I mean that's basically it, Pamela. Yeah, you're right. The game is over, folks. They're not going to be able to play the debt game anymore. You're not going to be able to borrow your way out of here. I'm flashing back, going all the way back to 2008. In 2008, that was the big thing. You can't borrow your way out of this crisis. Well, guess what? You could, and they did. But now we're at this other new inflection point. And the inflection point is, if you look at it, maybe some of you are not non-U.S. folks, but if you look at it from an American viewpoint, there we have Trump. Trump has been saying what he said a couple of days ago for 30 and 40 years, going back to those Oprah interviews. He goes, I'm tired of seeing America getting ripped off. And now he's in a place to do something about it. And I think this is a big moment for us all to look at. Yeah, Vietnam's going to drop the tariffs. Guess what? So is everyone else. So is this a buying opportunity? I don't think so yet. I'm going to bring out, yes, since I was rattling on, we've rallied about 1% almost. We're all the way back to 5180. So let's get to we'll come back to this conversation. How is America getting ripped off? You're obviously not in America. We can't sell any of our products in Europe. I was in Switzerland and Dubai year before last. Didn't see any Fords or GMs on the road there. Didn't see any car. That's not true. In Dubai, I made a comment with the folks that I was that we were in a business meeting with, that when we were driving downtown Dubai from our hotel, is that I could, if it wasn't for the backdrop and the buildings that were there, the streets looked like I could be in Dallas, Texas. There were Ford pickup trucks, all kinds of American cars and stuff, and mainly pickup trucks and things of that sort. They were everywhere. And I was like, wow, this looks like the U.S. Because why? There's no tariffs. So go to Europe. Maybe you're there. You'll go. All right, so let's get back to the markets. All right, let's do that. It's the beauty of having your own YouTube channel. You can rattle on. I'm going to hang around for a while. So let's watch this last 20 minutes or so. Let's get E-minis up. This is monthly, so let's get it down. Let's take a look at the hourly graphs here. We got a little bit of hourly. Oh, look at this. We got, while we were talking here, we got a nice V bottom. So those of you that, let me stretch this out a little bit. So let's just take a look. This is an hourly graph. We're still within this downward channel. We got these dotted formations here. These are predictive indicators. It's running the autoregression math to predict where the moving averages are going. These PPMs, the grayed out lines, are actually the predictive. And so we're seeing a prediction into for a recovery coming in here. Possibly if we can get through, what do we got? Yeah, we don't have enough time. The clock's run out. So we should have some pretty good resistance right here at the right at 52.23. Last trade right now, 51.72. So we could see another 30 to 50 handles on the upside here. This last hour was pretty much an outside reversal pattern, so we're getting some recovery being done. But let's go out one to a daily chart here real quick. So do a quick walkthrough. So this, going back when the market, when we printed 57.73, I believe, yeah, 57.73 was the print high on Wednesday. And we got that big rejection right at the 200-day moving average. And we went straight down. These Fibonacci targets, 5180, 5128, and 57. And I just want, in my newsletter every day, I develop some Let me bring something up over on the screen here. This was last night's sheet. If you notice, it had an 8 out of 10 downtrend forecasted, but these things right here, if I can read them, they're pretty tiny here. But it says continued negative price range, but this was the key thing. Price significantly below all the moving averages. Fibonacci target point possible further downside to 5180. This was put out last night, okay? And then as we come back over here, we're trading 5170 right now, and this 5180 was this fib target where my cursor is right now. That was the target. Now there's still two targets. If we look at the predictions of where my cursor is down below, where the algos are suggesting that we have weakness into Tuesday expanding, so we easily could come down to this next number here of 49.28, and I've got some numbers on my sheet here. Let me just look at a couple numbers that there, and I mentioned these last night. So 5112 was one of the numbers. The low has been 5107. So that was the number I put out on YouTube on Tuesday. Then I reiterated that last night. And then the range is 5112 to 4836. And I believe that's in between some of these fib. This next fib target is 49.22, and this is kind of a free fall here. It can bounce. It looks like we're going to get what's called an RTX buy signal, which means we go sideways for a couple of days, but this incredible acceleration on the downside is going to be dominant for the next week, maybe longer. Does that mean the markets go straight down? It means they can go sideways, they can rally back towards these moving averages, and then I think we get a rejection and at least one more low in this pattern before we get there. But I believe I laid out a pretty decent pattern last night. If you go to last night's video, there is a section there where I'm going through the target zones. I know these live streams get really live. I don't have anyone to do the timestamps on the videos right now. So maybe if you're you would like to help me with that, you could send me an email to info@kendallreport.com. But anyway, these numbers here are pretty substantial numbers. And it's interesting because the last key low, well, the breakdown was the 55.61. We took all of that out. So it will be interesting to see how this goes. So let's go ahead. I'm going to let you guys run the shows for a little bit. We kind of know where we are. We'll snap back and forth to see how this close comes in. But let's go ahead and do crude oil. And let's go a little bit longer. Let's go into a monthly view of this just to get a little better handle. So crude oil has been in this configuration for a while. It does look like it's going to stay along this line here, which is going to be around $58 to around 75. So we're kind of pushing things down, and that's exactly what everybody wanted. Want lower oil? Here's lower oil, and the markets. Like I said, everything's getting taken out of here. I started talking about the third quarter recession probably 2 months ago. You could fact check me on that. I think it was in my Substack. I've been talking about this coming recession third quarter. I still think that's the case. What I'm looking for is at least one, maybe 2 quarters of negative numbers. But listen, going back to the four to $6 trillion of capital investments, if those numbers are rolled out at the right time, that's going to change market sentiment, I think, a bit. Yeah, I don't know what I've heard that happening. Somebody said my email bounces like a mofo. I don't know why. I don't see any issues with it. I've actually checked it. I will go into that. Yeah, Floyd's Garage. We'll bounce around. You guys are kind of running the show here for a little bit, so. See if I can get. So this is kind of interesting. This is the U.S. inflation rate from the BLS, and the red dot indicator is suggesting, and I've been talking about this, that we're going to see an increase up to about 4%. So this is inflation. So maybe some of these are inflationary numbers are going to come. Maybe the tariffs will prove out to have some inflation. But I don't think that the last thing, if this is the case, this is going to be the conundrum here, is if this, we're going to see an increase. I've been talking about this echo bounce for a long time. And let me draw what that means when I talk about that. So when you get this big move and you come down and you collapse like this, you get this. You usually will get this right here is what would be projected up around 5% on. This is where the bounce would come to. What we're seeing right now, let me take this off, is this move up toward here. So anybody that's got the indicators, by the way, can use this. This is what we call the red dot indicator. It's just simply setting any of the WTRs to one period, and it will calculate out. So it looks like we're probably going to get into one of my classic moving average triangles here. Let me remove this. So these moving averages will probably set up some kind of wedge, and then we'll see the inflation start to come back up here, and this is toward year end is what's being projected. We'll see what happens. Going back and looking back in history, we did project this indicator projected this low. And then it's been projecting an increase in yields for a while. And this is where I've been talking, haven't talked about it probably for the last 6 weeks or so, but an echo bounce. So you get these big declines, and then you get some type of retracement, like just Fibonacci be a 0.32. Trueflation. I don't know what trueflation is, Andy. I'm just reading some comments here real quick. Let me just absorb some of this. Back in the pandemic days, we used to get 1,000 live. We got 400. Welcome, everyone. Just looking here at some comments coming through. Yeah, like I said, somebody making a comment looks bearish for bonds. I think bonds are going to be an issue, but I think more than anything, one of my great slogans going back probably to 20, maybe back a decade is we're always just one bad auction away from disaster. So if somebody doesn't show up and we don't even get a 2-to-1 coverage, it will be absolutely disastrous. Oh, Trumpflation. Okay. That's fine. Well, there you go. It's on the screen now. This, but as you can see, it was a little higher in 21. That this is really a natural bounce. It wouldn't matter if I were president. This would still happen. Okay, I'm just looking some. Yeah, so let's go back. What time are we getting to be? About 10 minutes. Let's move back to quickly to just a 5-minute chart. 5-minute chart. Sorry about that. Yeah, so 5 minutes is coming in. Looks like the close. Looks like we got some selling coming in. This has been happening also, is that we get some selling coming into that final 10-minute period. We'll see how far down it goes. Here's the deal, folks. Markets are going to close in a minute. We've been live for about 54 minutes. Let's go through, when we're done here, let's go through some charts like we used to in the old days, and we'll just go through some stuff. We got a fair amount of people here. Yeah, there it is. Moon Cactus, 10-minute rig. Are you the guy that was always on my in my live room? Because that's so accurate, it's unbelievable. Yeah, Floyd's Garage, you're right. There is demand-based. Okay. Yeah, so this thing's selling off, just like I was just talking about. We could retest, maybe even blow out the lows here. Let's bring this down just a little bit. Yeah, what was the low? Was 5108, and we're 5114. They're selling pretty hard coming in here, folks. So we'll watch what time we got. 54. We'll chat, and I'll answer some questions. We'll watch this close. I think I can pop this up on the screen. Yeah, so you can see this big hit coming here on this. I wanted to kind of look at yeah, this stuff is all over the place. So '07, you can see right above me here on this scale that we're about to make a new low here on the day. Pretty close. We're 3 ticks off with the way this thing's trading. There we go. New lows coming into the close. Never a good sign. 4 minutes to go. 5106. Do we take out 51 handle? We'll continue to watch this for a second here. 13. So we made a new low and we're bouncing just a little bit here. Back to 14. And maybe that was... Yeah, I want you to notice... let me go off screen so we can see this. But I want you to notice how erratic this is the level 2 screen. There's no liquidity out here. There's 1 and 2, 8 contracts on a point. So you can just see we're kind of just bouncing around here. We've got 2 minutes and 20 seconds to go. So the new low printed was 06 even. Looks like they're trying to come for them again here. Yeah, so still, yeah, we actually now have 2 minutes and 40 seconds. I was wrong about the timing. Yeah, so that's actually Carlo brings up something that I've talked about for a lot of years, is don't let us put bases in your country. You know, those folks in Germany and around the planet. My dad was in the Army Corps of Engineers in World War II and built the Okinawa airport. The Okinawa airport is still there. Not the original, but he was the first one to work on that in World War II. Yeah, so we just went 04, printed another new low here. There's a lot of selling coming in at the close, folks. This is never a good sign. Somebody earlier was talking about, yeah, I normally don't, I love it. Somebody's got fear. One of the acronyms is false events appearing real. And the other one is fuck everything and run. So I'm going with the latter. That's what things are doing. I usually don't curse much, but that was just too obvious. Yeah, the problem with Japan rearming is everybody's 60 years old. They're, what, 600,000 people disappeared last year because of demographics. That's the other issue we have. And, you know, Elon Musk talks about that all the time, is we need to make more babies. He's keeping his quota up. But that's the problem. There's nobody to fulfill a lot of these things. Robotics, maybe there'll be like Star Wars, the Clone Wars, only this will be robots. But yeah, you can see we printed down, what was the low here? 03 printed. So we're back to 10, but literally the bid ask is about $2 right now. No, that acronym always triggers me. I apologize for that. Yeah, I think you answered your own question. It's already blood dry. Okay, that was a close right there. So yeah, 03 print. So now there's a little bit of short covering coming in here. Crazy trading, folks. All right, Yeah, I had an okay trading day earlier. Appreciate it. I like the fear experiences reality. That's a new one. I like that. Yeah, so pretty brutal. Like I said, 1987, 3 days, 40%. We got a ways to go to match the big ones. Um, um, okay, so let's go through some. Let's do some stocks. This is 5 minute, but let's get to daily. This is there's a couple daily targets here on Tesla. We're looking at 141 is the target. These are new targets way down here. There's some old targets here at 207, 180. There was a point in time, let me go monthly here on Tesla. Let's do some stocks, so give me some suggestions here. You know what, before we go down this trail, I want to talk about something here real quick. I want to bring up the WaveTech tool, and I'm going to make this was something that happened going back in 2020, mid 2020. We never, this is an old legacy platform, and it looks somewhat wonky, but in the end, it's very powerful. And right now, the intermediate model's at 33%. So out of 14,723 symbols, we only have 49.89. I suspect this is going to drop at least down to somewhere under 28% in tonight's run. But if I go over to the daily, this already dropped to 26. This thing is going sub 22 after today, I would suspect. And this is going to go into full liquidation mode. But here is the thing, the reason why I want to bring this up, and then we'll do some stocks here, is the reason I brought this up is if those of you around in the back in 2020, 21, if you recall when this database gets washed out like this, in 2020, and I believe it was late March, early April, we started buying thousands of stocks in this database. We started getting buy signals on a lot of this stuff. I'm telling you, this thing's like $3.80 a day. That probably this is going to be one of the best tools, and you can build unlimited watch lists. You can build portfolios, all kinds of stuff. And I'm going to kind of re-engage with this platform, because this is an opportunity for a lot of folks to make some money. We took, if you recall back when Warren Buffett did, I don't know if I'm in the right account or not. Let me look at something here. I'm not in the right account, but the point of where I was going is that Warren Buffett sold his airline stocks, and we use this platform, and we made, in the next 6 months, we made 100% return on airlines. I am going to spend some time trying to find out where we're going to benefit from here. And I'll probably start doing some more live streams showing folks how to use this, because this is going to be the place to go. And I will put the links. I'll put a link tree link in the on how to get this platform. Like I said, it's probably going to be in the next 2 to 3 weeks, depending on how this washout happens. We were able to time this low on thousands of symbols, and I suspect if we get blown out, it's going to take about 2 or 3 weeks. And like I said, I'm going to start engaging this, because a lot of us made a lot of money using this platform. Maybe you had already subscribed earlier. You're probably going to have to use a new email to get signed up. I don't know that we can regenerate some of these old accounts, but this is something that will go. Yeah, I see Chi-Town Tony. Listen, folks, there's some things here that we can do that are pretty amazing. Now, I have got scripts to use this product with Claude, with Orthombric, and use Claude 3.7 Sonnet on this, and I've been able to generate probabilities, all kinds of stuff. There's a whole lot of tools. Probably for the last 2 months, I've been working on the AI and just trying to come up with some stuff that you can use to empower you using this platform, and then bringing in some predictive math. I've already done the math, so I have these little TSX files, .tx files, that are a combination of JavaScript. I have some JavaScript. I have a bunch of stuff that I have built that will pull some magic out of this thing. So I haven't talked about this product for years, but the moments like right now are where we're going to see this thing get completely probably washed out in the next couple of weeks, and we're going to have a clean slate. And the only time we've had clean slates was in 2020 and 2008. Everything else, there's a lot of noise and stuff in here. But once you wash this database out like this, the opportunity is going to be there. And that is, that's something I just want to bring up before we go into stocks, and just start to look at stuff. I believe pretty much everything is going to be been blown out of here. I'm just curious on this last. So Apple's looking pretty ugly. We sold that up at 360 on the last trade. So out right now. The other thing that I have that I'm working on, folks, just so you know, to bring this logic, I've actually done some pretty amazing work again and I've actually got some trading models that I have taken and brought into TradingView from WaveTech. And there's a lot of things. This couldn't be better timing, because there's going to be a ton of money. This is, I've told you this before, one of my first companies I worked for in Chicago, when I came off the floor and went upstairs, I worked for a company called Clayton Brokerage Company of St. Louis. They were a grain company, but commodity house. They were one of the bigger commodity trading houses in 1979. When I came up off the floor and went up upstairs, their slogan was change equals opportunity. And I don't think we've seen a bigger opportunity. That's, you can troll Trump, you can talk about the collapse, all that shit. Pay attention here, folks, that this is really an opportunity that's being presented. And there's going to be a shift. Can you figure out where it's going to go? Well, that's the reason why I built that last platform I was just showing you. when I bring this back up. The reason why I built this whole platform was very simple, because you and I can't watch 17, 14,000 symbols at the same time. This thing can, and we can tell it which things to focus on. We can build our own portfolios. I did something here, right here, this AI test portfolio. I built this last year using AI to select stocks. It's interesting. Right now it is 70% in cash, 69.05. Let me get off screen here. It's up 2.34% this year. It only made 6 last year, nothing big, but I think it's kind of interesting because the equity curves have been pretty steady when you look at this. But it's 70% in cash, and this is one of the things that that this process does. It gets you out of harm's way when the markets get ugly. So we took this little bit of hit, and then it's flattened out the curve because we're 70-30. And if we look at what's being held right now, we got 3 stocks: SIBO Global Markets, GILD, and IBM. I think that stock got pretty much hit. That'll probably be out of here. But the bottom line is that's the only 3 stocks out of the 10 that it's held. So it automatically adjusts your exposure. It does a lot of things. So now this is going to be a place where you can come up with ideas and catch the turnaround trends, all that stuff. So anyway, pay attention. I'll be doing some more stuff on this week, and I'll be starting to reveal some of the of these scripts that I have. And ultimately, those of you already subscribed, I'm going to put some videos together on how to use these scripts as well. All right, over to the markets. Here we go. Yeah, Green Garden, it tells you right on the screen, buy, sell. But there's a bunch of videos out there on YouTube channel as well. But right now it's not telling you to buy anything. It's telling you to sell. Yeah, and I'm going to be coming to you guys with the summit as well. So I've picked up a little bit of bandwidth here lately. So let's go ahead. Let's go through some stocks. I'll go off screen. You guys tell me what you want to talk about. Samuel, I don't know if you're talking to me or not. The BADJ on ES, I don't know what that is. So obviously, if you're talking to me, I'm not using it. Well, that's great, Mohammed. That's awesome. All right, let's do this. I'm just going to start with the list here. This is daily Google. All of these markets are looking at around Tuesday turnaround. We'll see if this confirms as we go through some stuff. Yeah. Ian, yeah, the markets go up and down. not just up. Stocks don't always go up. All right, so let's do some of this stuff. So I did some gold stuff earlier. I think gold's probably topped out. I'm just looking here. We'll get to, we got Google up here. This is daily. Let's go weekly because I think all of these stocks should be reviewed on a weekly basis. So you're probably heading for the 200, but this is very interesting. If you look at these, let me spread these out a little bit. If you look at the algos, this is the way a lot of stuff looks. Looks like peak downside momentum. Doesn't mean that they peak that it's just going to turn around, but it does tell you that the extreme downside is right now this week. We'll see if it extends, but right now the projections by the algos are suggesting that momentum's going to bleed off. But that means that we are going to trade back toward the 10-period moving average. And the way these PPMs work, if you take out this first green line here, which is the first derivative, if the value of the PPM goes through that, then that means that we will test the 10-period moving average. And so on Google, that would mean 174, but it is, let me just see what it's doing here. Yeah, it's going down about $6-7 per week. So 174 would be, we'll call it 168, but we're going to move back towards that. So if it takes 2 weeks, all of a sudden it's 162, and that's not much of a rally, but we'll see how it sets up. It looks like there's going to be continued downward pressure. The only good thing is that, let me just double check here. Yeah, while the very bottom indicator here, let me put a cursor on it here. This very bottom indicator is the 200, the WaveTech 200. That is suggesting that the 200 is trying to roll over. I talked about that on the markets, is that once that 200 starts to roll, then that becomes the dominant trend, and that's going to be the point to watch for a rejection around 200. In this case, we're just coming down to it. So there's still a positive integer on there. So that means that we'll probably bounce off the 200, and the 200s, we got 137. So we could see easily a continuation of 137. Let's see if I can get through some of these real quick. Yeah, I was just looking at Tesla, but I'm going to bring it back up. This is a weekly Tesla. Same, there's still a lot of downward pressure. We're trading at the 200. And actually, if I blow this up, this 200, we went down to, let me just get these numbers here. Back in 23, those lows were around 100. I did have on the dailies, I've got targets down as low as 84, but I think we probably hold in this range here. And we've got a potential wedge building, which is above the 200 and below this declining, this cross point here, which would be about 301. And so the 200 is 248. So we're going to call it 250, 300. We're probably going to get locked there on Tesla. Got to look at micro strategies. Yeah, it's interesting. We've got this wedge building here. The scenario, this is a weekly, the scenario that I've been talking about is that just to relate this to Bitcoin, because it looks pretty much like a Bitcoin chart. We'll go to Bitcoin next. Then I'll segue, then I'll go back to some of the other stocks that you guys are talking about. Bear with me 1 second here. I need something to drink. So, so you got this upward slope, 40 ppms trying to stabilize, but basically in this sideways range. I think we stay sideways into May, June here, where we just stay between these values, the extreme values right now. 293, we're going to call the bottom end here, right at the bear with me a second, 231. Looks like pretty stable there. So let's do Bitcoin. As I said, Bitcoin looks fairly similar. You got a little more volatility, but this rising 40-week moving average has been dominant. And let me draw in something, because this is one of the theories. So rather than drawing trend lines, so you don't, I'll draw trend lines and things just to focus it in, but I don't use trend lines to trade off of. But these moving averages, the reason why I have the ppms in my indicator suite is that I measure the angle of attack of how the moving average is rising. So back in the mid 80s, associate of mine, we wanted to figure out, when does a moving average make a valid trend line up or down? What are the characteristics why the markets stay below them, above them, and when do they go through? So that's the high. Those are the questions we are asking. And when you see a slope like this, when you see a slope like this moving average here and this average here, this is what I've been talking about in the Substack, that we're going to stay inside of this box. And somewhere over here, we get to, this is like mid-June. When this thing gets to a point, we will decide which way we're going. We'll decide somewhere in this region here. We'll decide whether we're going up or down. I would argue that this entire pattern right here is a distribution pattern. I talked about that in a newsletter a while. Now we're up against this support level where these upward slope 40 week and downward slope 21 is where things are landing. And then at some stage, we could still stay in this mess where we're just kind of locked in a range. And, I always go on about this, but I'm still convinced you don't want the U.S. government or governments owning Bitcoin. I know some folks think that's a good idea. I don't think it's a good idea. But what we've already seen, this mess that we see up here where my cursor is, this was all your ETFs and your options and stuff. That's what it did for you. Everybody thought, oh, it's going to 200,000 this year. Maybe, but right now, this congestion range, this is where all the ETFs, the arbitrageurs, and all of the market makers and everybody, this is what they did for you. This thing probably should have shot right into, went to the moon right here, but it didn't, because there was the wrong, you brought the bad guys into this market. But anyway, this is what we're seeing here. So you're going to see probably a lot of resistance at 100,000, 110, whatever you want to call it there. Okay. Did not do, man, lots of stocks here. We got a half hour to go. I'll try to keep it going. Let's do Palantir. I got to go daily to see if I can get some numbers to come out here. Yeah, so, this thing obviously got crazy frothy. I love I saw a tweet or somebody, and when it reversed, he goes, "This is what it looks like. People are trying to figure out what this company actually does." Thought that was pretty good. So we went from 125 down to 75. Pretty big hit. This is a daily chart here. And now we've got Fibonacci targets, the 200s coming in. What it looks like, folks, and I'm just going to make a general statement, and as we go through some more stocks, is that everything's going to its 200-day. If it was well above it, it's pulling back. That's kind of the corrective phase. And we have right now it's way down here at the bottom. I know the value is hard to see, but it's I got to get over here in front of the screen. It is a plus 0.42. So the probabilities are like 80% that will hold this 200-day. If you get there, that's probably a bargain. That's probably a good bounce off of there. But that's going to be your, what I call a primary demand line for this stock. Yeah, so one of the things, hang on a second here. Yeah, so let's, I'm just looking through, there's a lot of symbols that you folks put out there. Let's do Amazon next. Amazon again, Tuesday. Everything's pointing to Tuesday dailies that at least we're going to be at peak downside. Looks like we got an RTX buy signal. We may go sideways into that number, but if you notice, don't know if this is a bit far in advance, but as we look into April, everything looks like it's going to recover. So let's talk about what that might be. And this is just about on every stock we're looking at here, folks, is there more Vietnams out there? Are they going to call up and say, hey, by the way, can we just lower the tariffs to zero? And I think what you're going to see is that Trump is going to force these guys into the corner. You want the markets down another 20% next week? Fine. Retaliate. He's not going to bend. I quoted Eric Trump yesterday, but he said that the guys that negotiate early will be winners. The guys that wait too long will be losers. He goes, I've watched this my whole life. So he's watched his dad go through and negotiate a lot of deals, and the longer you go, the more likely you're going to lose. And that's going to be the case here as well. I think everybody's trying to stand up and be strong and all that. It's not going to work. Yeah, maybe you're right. MSTR is holding up Bitcoin because you're buying every day, right? So yeah, maybe that's it. Okay. I'm just grabbing. I'm just looking at some stocks here. I'm going to grab. Yeah, let's do ASML. Tuesday. Everything's Tuesday. In this case, it's below its 200, and the 200's in a pretty big downtrend. Let's go weekly real quick. Yeah, so we're even below the 200 week. But once again, I'm just going to state that it looks to me that at least there's a possibility, a lot of probabilities are lining up that we're going to see lows coming in on Tuesday. It was a pretty ugly close today. Everybody's still selling on the close. Let me look back at something here real quick. Yeah, look at this. We continued to sell off after the close. We're down to 50.74 low now. It's bouncing back a little bit. But this was something that I saw happen last Friday as they kept selling in the aftermarket like relentlessly. The market was making new lows in the last few ticks and they were still selling. So there's been a lot of selling around this market going in, not just this week, but last week as well. So that is significant. All right, let's go back to TradingView here. Let's pick a couple more stocks. Picking some random stuff here. Yeah, Reddit doesn't have much of a history weekly. Let's see if we can get it to daily. It's a fairly new offering. Yeah, we're below the 200. The 200 is still positive, so it's probably going to migrate back towards this, but this is potentially a bottomless pit. I guess those of you that believe in the gaps being filled, that's what we just did here, going way back to October of last year. I'm really just trying to look at stocks I don't. Let's do a VIX. Yeah, look at the VIX all peaked out. So you can see the red dot is just coming, projecting back towards 31 or 45. Let's go back a ways. So last big spike, August 24, we got to 65. Let's go historical here. Yeah, that's one of the biggest spikes for a while. This was the 65. Yeah, right there was the 85. That was March 18th, 2020. So, little secondary spike here. I'm sure we're very close, folks. I will tell you, I think from the standpoint of, let me just get to another stock here. Let's do TSM. What did I do? Bear with me a second while I get this scaling so we can use it. Yeah, TSM looks pretty ugly. This is daily. Everything Tuesday, Wednesday for at least a move back to the 10-day moving average. So there's going to be probably a mini trade. You want to hold back. You want to watch Monday's activity, and then we can start to look. Then we can start to look at for trades. I don't know that this is going to be the ultimate bottom, but let's say over the weekend, the White House phone is ringing, and when Trump made a comment yesterday that he thought that the whole thing was going wonderful, he wasn't talking about the market's reaction to it. He was talking to how many messages were left and phone calls he was getting from people wanting to do a deal. And I think this whole thing is going to play out from the standpoint of who does a deal, who doesn't do a deal. And I think some of this market craziness will start to consolidate here in the next couple of days. The way I'm going to be able to see this is my event. I'm going to come back here and put up this. I'm going to put up the research. I'm going to watch our database get washed out, and then what has to happen when you get a breakdown of all these patterns that we're looking at right now, like this here, we have to set up. It's not just about a price bottom, because if you're trying to grab at a price, a low price, what you don't want to do is that. What you want is you want to build structure around a price. So even if you pay up where the market bottoms at a price, it rallies up, and then it starts to come back and does a retracement, the old cup and handle, stuff like that. But that's the reason why those things are important is because there's enough folks starting to accumulate and to buy that stock back in. You might get the best price, but you might have to wait 3 months, 6 months, who knows how long before you get the price. That's the beauty of the WaveTech database, is it looks for that structure. It's not going to put a buyout until the probabilities for the market to move up are there. So let me just play this out a little bit here. I'm just trying to think here. A good stock. Let's just use Apple. Helps that I get symbol in right. Fat fingered that. So if we come up here to Apple and we start to look at a daily model, what you're going to see here, this is not going to reflect today. So there's another blip down here. You're going to have to build structure around these prices to try to get a decent bottom, especially if you go weekly. This thing's straight down, so you're not going to see anything. We're looking at from a intermediate model standpoint. Let me just go back there 1 second. Let's put TSM. Let's go to a short-term model. That's interesting. It tried buying this blip and then got out the next day, 2 days. So it's out right now. So whenever you see, I was trying to find some good structure. These are pretty volatile stocks, but you need to get a move. Let's come back up over here. So we've got the price low. Let's just do it here. I'll draw on screen here. So you get these little head fake formations. Let's do a quick education here. So when you get a price breaking down like what we're doing right now, we get here, you're going to need to see this thing consolidate here, get into some kind of formation, then you can see a rebound maybe back to the 200-day. You could argue that, hey, I picked the low price, but the risk is that this is in a different pattern and it's going down to these Fibonacci numbers. And this is just looking at price. Let me take this all off here. So what we're going to have to see is at least over here into mid-April before we'll see enough structure come into this market. But we could see further declines where we get moves down. This is TSM on a daily. So we still have live Fibonacci targets for 127, 102 on this stock. It looks like downward momentum is going to peak, but that doesn't mean we can't keep going down. We did get something I talk about. We closed below the market grid today, so we're probably going to go sideways into the 10-period moving average for a few days. But I guess what I'm trying to come up with here is that we're really looking at early next week, at least finding some stability. We could see another ugly Monday. Depends on what kind of, there's going to be lots of news this weekend. So part of what we were seeing in the selling coming out, let me bring that back up, see what's happening. Yeah, so it's rebounded back almost to 5,100. It went down, as I mentioned just a minute ago, went down to 50, I can get to this 77, 70, 74 was the low. So it's rebounded off of that. But the bottom line is folks are still out there nervous. And so we could see some more follow through, but there's going to be plenty of noise from that standpoint. All right. Come back on screen. I will do a couple more questions here. And then I'm going to call it quits. I'm getting at the end of the game here. So yeah, let's see. Just looking at, go back. Yeah, folks, I think we're just going to run it down a little bit, but let's just talk about this weekend. I appreciate everybody hanging out. We had a lot of folks hanging out. Really appreciate it. A lot of super chats. Thank you for everybody that did that. If you haven't subscribed, hit the like button, subscribe, all that good stuff. But let's just talk about this weekend. As this weekend is going to be very noisy, I predict that Trump is going to be on Truth Social, going to be all kinds of releases. You're going to see Lucknick, Scott Bressett running around. Anybody they talk to is going to be out there. They're going to be jawboning all this stuff. Like, hey, we talked to France, we talked to this guy, we talked to that one. And there's going to be a lot of noise. So we'll see how this market comes in on Monday, and on Sunday night, we'll get a good view of that. My plan is right now is that I'll be back at least next Tuesday. I might be back on Monday. Depends on what's going on here. I'm going to stay engaged. I'm also going to be talking a little bit. Like I said, I think the washout in the database is real and will happen here very soon. This weekend, we'll see it start. I'm anxious to see the models come out on the intermediate. And if we get a full washout there, it's going to take several weeks to rebuild. It's sort of like I was saying, you got to rebuild everything before you can get any sustainable move. So this market's been broken enough that there's a lot of work to be done. So nobody needs to hurry. Maybe there's a couple stocks that if you know real well, but be cautious because there's going to be plenty of noise and plenty of events that are going to happen that are going to keep the volatility high, I suspect, and we're going to see a lot of erratic behavior because the liquidity is a big issue right now, and we haven't seen one of these liquidity events for a while, but this is one, and this is going to keep things pretty volatile. Yeah, I said there was a possibility. Somebody's saying that I said that there was going to be a bounce, was likely a low and a bounce coming yesterday, but I was talking about next week. Didn't the targets? If you read the Substack, make sure you get the Substack. It's $8 a month. At least try it out. There's a 7-day trial. Last night I put a free version out. But the analytics and the fact sheets, all of that stuff that comes out right now is worth it. I'm working on a project for those of you that have the indicators and you want to run your own fact sheets on anything. I'm hoping to have that out here in the next several days, if not by the end of the week. So watch for that. It's going to be launched through Substack, I believe. There's going to be a full review, how to use, what all the components are, what the math is behind these sheets, all of that stuff. It's stuff I've been working on for about 3 months. So make sure you watch for that. If you can do a free version of the Kendall report. So it's kendallreport.substack.com. Just get a free version. You'll be able to get notifications, and there's stuff that goes out every day. You get partial view of the newsletter every day. There's that. The indicators are going to be really important to have because these fact sheets, you're going to be able to generate fact sheets. It looks like I've got it just about figured out that we can use this for weekly ranges. I showed a couple videos ago how you can take the fact sheet, put it into Claude or even in ChatGPT, and you can ask some questions of the fact sheets to set up trades, option trades, swing trades, day trades. It's pretty amazing. Once you have the data, you just need to know how to structure. And I've been playing through some of these, and they're quite good. And they're because of the data that they're working off of. It's not just looking at random data off of the screen saying, "Hey, tell me what's a good trade." There's a lot of metrics and probabilities built into these spreadsheets. So that's going to be a thing as well. So with that being said, everybody, I'm just looking at the last comments here. Yeah, it looks like... and I mentioned, and I'll put those in. I'll put. Give me just a little bit after this live stream ends. I'll get a new thumbnail up and some descriptions on how to get to all this stuff. How funny. Andy, that's funny. U.S. Prime Minister seeks new trade deal with the U.S. That stole the words right out of my mouth. All right, I'm going to do it. Somebody, very quick. Here's Intel. Intel's breaking through. This is the daily. Let's go weekly. And then this is it. You lured me in. Intel does not look as bad as TSM and NVIDIA. In fact, it looks like it's trying to stabilize along this line here. So we're probably in pretty good shape. Ultimately moving up into these Fibonacci targets above the markets here right now at 28 to 31 round numbers, 31 and a half. And then ultimately getting back to the 200-day moving average, which right now is 39, but is declining, but we'll probably move back up. But Intel looks pretty decent here, certainly compared to the other players. Yeah, Floyd's Garage, most of those are here in Arizona. We got TSM, we got Intel. Intel's been here for a long time from that standpoint. All right. Got me. Get these indicators, folks. They're going to be real useful, especially coming out of this hole. Not a problem. But yeah, it looks pretty good. Yeah, it's funny because chips take a lot of water, and everybody thinks of Arizona as dry. I have to check this stat, but for many years, the highest boat ownership per capita in the country in the U.S. is Arizona. We have lots of big reservoirs, and every guy with a pickup truck has a boat behind it, so it's pretty funny. But those are registered boats. They're not yachts, but they're boats. It's kind of a funny stat. People don't. If you zoom out on Google Maps, you'll see we got a bunch of water around here. So anyway, folks, have a great weekend. I will see you next week. Make sure you check out. I'll get all the stuff in the details on this video as soon as it gets closed down. It'll take me a few minutes, but you definitely want to go to that link tree, take a look at this stuff. I would tell you to invest a little money into our WaveTech product. I'm going to spend some time showing you folks how to map out this turnaround when it comes. Like I said, change equals opportunity. We've got a lot of change coming. It's so funny that the UK is already coming to the table. We're talking 2 days. They don't want anything, they don't want anything of this. Trust me. And Trump is, it's like playing chicken. He's not going to turn. You better turn before he does. Anyway, have a great weekend. Good luck, everyone. Be safe. Talk to you soon.